But I don't see any other way forward because if you just have these hacks, these massive hacks that can just happen and everyone is at a loss, you're not going to get the real world coming over to crypto. I mean, just imagine if like how devastating it would be if like Wells Fargo was just hacked and all the money in Wells Fargo is just gone, just locked up in some wallet.
Over the freaking last year, I feel like we've had billions of dollars hacked, right? And today we're going to dive into what's happening there on Mango. And we have Justin back again, and he's going to lead off the conversation. So stay tuned to the end to hear everything about the Mango hack.
Yeah, good morning, everybody. This was not a surprising turn of events given the way things have been going. Seems like during the bear market, everyone just wants to hack each other. So here we are with yet another one, this time for $114 million. Although this one, some people are not calling it a hack. They're calling it market manipulation. And actually, the hacker was doxxed and is now on Twitter with their real world identity, claiming that everything was totally cool. It was just a, quote, profitable trade. So this is a very interesting story. Essentially what happened was this hacker deposited a bunch of USDC onto Mango, which is a combination of a lending market and a perpetual futures trading protocol. So they deposited this USDC, which allowed them to take a leverage long position on the Mango governance token, MNGO. Then this hacker or trader, however you want to call it, they went on to FTX and started pumping up the price of the Mango token by just buying a lot of it. And it's a pretty thin market. So they were able to pump the price by 10x in a short period of time. And now the oracles that run on chain for providing the price information to the Mango smart contracts, those were telling it, hey, this thing is worth a lot more. So that guy who took that Mango leverage long position, he's way in profit now. And so what this hacker was able to do was trick the system to think that they were way in the profit and borrow a bunch of money against that profitable position. And so they basically just borrowed a bunch of SOL, BTC, USDT, everything they could out of the protocol. And then, of course, inevitably, the true price of Mango crashes back down. Of course, they have to close their long on FTX. And they just don't pay off the loan. They just walk away with all of that borrowed collateral. And that left a huge $114 million hole in the balance sheet of the Mango treasury. And of course, the depositors are going to be the ones who are eating that loss. So if you've deposited USDC or SOL or whatever to Mango to try to either earn interest or borrow against it yourself, now there's a socialized loss that you're experiencing there. And so the Mango team was actually able to negotiate with the hacker, and the hacker returned about 60% or 67 million of the funds, which is an all-time high of a bug bounty. You know, most of the bug bounties we've seen where they've negotiated with hackers, you know, in exchange for not pursuing charges, it's been around 10%. So this 40% haul is definitely a new record there. And there was a lot of people upset about, you know, how it felt like the Mango core team was just sort of bowing down to this hacker. And the hacker, of course, claiming that it's not a hack, this market manipulation they did, it was all just an arbitrage or something. And so it remains to be seen how this is ultimately going to play out. We could see legal action take place, especially since the hacker is known. But yeah, it's definitely an interesting current event. And I think it definitely shows other lending markets, they have to be really careful about the collateral they let people borrow against. Because if you have some thinly traded token, someone can just go ahead and pump up the price of that and make it look worth more than it really is.
Now, you know, for everyone listening, there's a $47 million bounty, right? I mean, like
67 million.
Is that what it is? Or is that what it is? Or is 47 something around there?
Or sorry, that 67 million is what they returned. Yeah.
Yeah, and 47 million is the bug, right?
Right.
And I'm just sitting here thinking, shit, I'm in the wrong business, right? I think we all need to be a bug bounty hunter here in 2022. And you know, the question is, at the end of the day, you know, what is really the legality of all this? Because obviously we see this on a continuous basis with a lot of different projects over the last year. And typically people in the industry have kind of made it a norm to be around 10%, kind of call it what they'll say is the legal or allowed percentage. But at the end of the day, it's kind of exploit, right? I mean, you're kind of hacking something, you know, maybe a fault that the code had that vulnerability, but you stole funds, maybe, depending on how you view that. And so, you know, how do you think we move forward from here?
As I've said in our previous episodes, I don't think running to the authorities every time this happens is the long-term solution. Because, I mean, we're lucky in this case that the hacker is known, but most of the time the hacker is not known. and there's not much you can do to really track this person down. They're probably on some beach in Thailand by the time you realize anything happened. And you have these devastating losses that the law enforcement really aren't able to do anything about. It's very slim chance they actually catch the hacker and return the funds. So I think the long-term solution here is for crypto to build its own justice system and its own ability to fork a chain or an application and reverse the hack and go through some legitimacy aggregating process that the parties that use this protocol agreed to ahead of time to arbitrate the protocol in the event that something went wrong, and that you can fall back to that system and have it go through some sort of court-based process that establishes whether or not this trade or hack or whatever happened really was a hack according to some explicit definitions, and to potentially reverse transactions. And I know a lot of people are going to say, oh my God, reverse transactions, it goes against everything crypto is for. But I don't see any other way forward, because if you just have these hacks, these massive hacks that can just happen and everyone is at a loss, you're not going to get the real world coming over to crypto. I mean, just imagine if how devastating it would be if Wells Fargo was just hacked and all the money in Wells Fargo is just gone, just locked up in some wallet. The world would just grind to a halt if something massive like that, one of these massive banks just disappeared. And so if we want really important stuff to run on crypto, we have to come up with governance processes ourselves to be able to handle these faults. And I feel like there's going to be a spectrum of degrees of reversibility and degrees of governance, but it's something that we have to experiment. And I do think that there is going to be a solution that does not involve running to traditional law enforcement to handle this stuff.
Yeah, I mean, it'll be interesting to see what plays out. I mean, the question is, does enforcement come over the next few years, right? And that's kind of what we'll see. From a user standpoint, are all the users also being made whole? And is there any impact to the users on the platform?
Yeah, as of right now, the users are being made whole with the funds that are returned. But the DAO, the Mango DAO itself, is taking a big loss there. So if you're a Mango token holder, then you've taken a loss on that capital. And who knows, the protocol may not have the funds to survive the bear market, and continue to pay developers, things like that. So this might be the end for Mango, but I certainly hope not, because they do have a very cool product on Solana.
Yeah, maybe someone will just copy it and spin off a new one, right?
Yeah, potentially, right? The code is out there for everybody. So,
all right. So let's. Anything else we want to touch on Mango today?
The last thing I'll say on that is that just be really careful with the lending markets that you deposit into. This is not the first time this year a lending market has potentially gone insolvent. There's the Solend drama earlier this summer where a large trader almost got liquidated on a Sol position where they were long the Solana token, but there wasn't enough liquidity to liquidate them. And so it would have been a similar deal where the depositors into this lending market would have had to take a socialized loss. And so, interestingly, the hacker of Mango posted on Twitter yesterday a theoretical attack on Aave to, I think they could borrow against the Ren token for Ren protocol, and basically do a similar thing where they pump that price up and it makes it look like it's worth more than it really is, and they just borrow a bunch of money, just withdraw a bunch of money out of the protocol and walk away with it. So just be very careful what you're depositing into. There's no risk-free deposit at this point.
Yeah, and for those that are looking for a more legal route, there are some sites out there that, some of the existing companies in the space do offer bounties, for finding certain bugs, and you go there and apply for that bounty if you find one.
That's right. There are some good code bounty sites, Gitcoin and Code for Arena. You can find a lot on those sites.
All right. So if anyone wants to obviously reach out to you on Twitter in regards to Mango, where should I hit you?
Yeah, find me at JGrizzled1, JGrizzled1.
The Joe Roberts Show.